Hi guys, welcome to this quick podcast. It's going to be relatively quick, just looking at clubs and societies and their final accounts. Very, very quickly, a couple of changes to final accounts of clubs and societies. The first thing is the income statement is now an income and expenditure account, and at the bottom it will have either a surplus or a deficit for the year. And the other thing, though, that's a big similarity, the top part here just really looks like the top half of a service tax business, and then underneath that we've got the expenses. So you've got your incomes at the top and then your expenses at the bottom. Statement of financial position is almost exactly the same as for any other company. The difference will be the capital. Instead of it being capital for a sole trader, you'll have the accumulated fund, but you'll still have an opening balance and a closing balance, and we'll just add any surplus or subtract any deficit. You won't see any drawings in these types of accounts. Right, what are we going to do? Well, what you will find on a typical exam question is a receipts and payments account, which is a summary of the cash book and all the amounts coming into the bank and as cash. Have an opening balance, they'll have a closing balance and a balance BD. And you may well, in fact, you almost always will find some additional information from which you've got to do your prepayments and accruals, maybe depreciation, and possibly the opening balance on the accumulated fund. Okay, so what are we going to do? Well, first of all, we need to do a subscriptions and payments account because we've now got subscriptions and prepayments, prepaid and owing. I'd always do the easy one first, so leave a line at the top for any opening balances. And we know that we've received 4,000 of cash. That would be in debit in bank or cash, and therefore it's a credit in the income account. So we'll put 4,000 in the income. Now I'd start off by doing the opening balances. Well, subscriptions owing is actually an asset, so it'll go on the debit side because members owe the club some money, and in this case they owe them 200. Okay, we've also got some subscriptions prepaid. Well, at the start of the year, if the club were to fold, they would have to refund the members that $150. So that goes on the credit side, it's a liability, and if we think about it, that prepayment is part of this year's income, so it should be linked to this 4,000 and increase it. Right, next I go on to do the balances carry forward. Well, at the end of the year, again, there are some subscriptions owing. So those subscriptions will form part of this year's income. So it's got to go on the credit side. And if you think about the logic, the balance brought forward, if I put it in, would be over here. And it would be on the debit side because it's money owing to the business. So the balance carry forward, that's got to go on the credit side. And finally, the subscriptions prepaid, well, they're not part of this year's income, so it's got to go on the opposite side to the bank entry because some of this 4,000 doesn't belong to this year, it belongs to next year, and it'll be a credit entry at the start of next year because at the start of next year that will be owed to the members if they don't take up the membership. Okay, now balance off the account. Okay, and then the balancing figure will be the amount that goes in the income and expenditure account. So that's 4,150. Notice here I've deliberately not done dates, etc., because the question doesn't ask me formally to do a subscriptions account, and therefore these are my workings. Okay, next thing on here, we'll look at the equipment. Have a double check that no equipment's been bought or sold, and it hasn't. So all we need to do to find the depreciation is to subtract the closing balance from the opening balance, and we've got 800 depreciation. And then for the insurance, well, I know that my insurance expense was 1,000, but then I've also got some insurance owing, so that's going to be an accrual, and I always add my accruals. So I'm going to do 1,000 plus 300, and then my rent. The rent is prepaid, so that needs to get subtracted from the amount of rent paid, wherever it is. There, 4,000. So 4,000, take away 200. My rent expense in the income statement or income expenditure account needs to be 3,800. Right, and now it's just a question of putting this information into my income and expenditure account. So the subscriptions we know are 4,150. That was no problem. We also know that we've got some income from race fees, so that goes in. Now, if the question doesn't ask you to do a trading account, you can do, but otherwise, for something like this coffee shop that they're running, we could run that as a separate trading account. But we're not going to here. We're just going to put it in to the top half and record the profit as being an income. And we're told there's an opening inventory of coffee and a closing inventory. Okay, I know my purchases of coffee were 400. And just looking down here, there's no opening or closing trade payables. Okay, so what I can do is come up with a gross profit of 2,610. And then if you look on here, there's a coffee staff wage of 600. So that's going to be an expense. So the profit is going to be $2,010, and then add all the incomes together to find the total income of the club as 9,160. And then what I need to do after that, I'm going to add in the marshal uniforms, and I'm also going to put in the depreciation, the insurance, and the rent to give me my total expenses. And then income takeaway expenses gives me, in this case, a surplus. It would be a deficit if this was a negative amount. Over here to the statement of financial position. Well, the equipment at valuation, we're told the valuation, so that's straightforward. We can put that in. Okay, my inventory comes from here, which is 60. My other receivables, that's 200 plus 300. And that comes from my prepayment, wherever it was, of rent. And also the business is owed 300 of subscriptions. And then the bank, straightforward. Students often miss this, but that comes from the receipts and payments account, balance carry forward. Okay, add those all together. Add together my current assets and my non-current assets, and that gives me my total assets. Okay, the accumulated fund, well, I'm told the opening balance, that's here in the information. Okay, I know the amount of surplus, and we'll add a surplus on like we would a profit in a normal capital account. That gives me my closing accumulated fund. And then the final thing here, we need to look for the other payables. The other payables are going to be the accruals. So that was the insurance owing of 300. And also I've got some subscriptions that are prepaid that we spoke about as being money owing. So they add up to 400, and hey presto, the whole thing balances off. Okay, the good news for you guys, I haven't actually done a worksheet to go with this that you're going to do anything with, because I'm going to send you a past paper question if I teach you. Okay, so you'll be doing that, but good luck with the past paper question. Any questions, ask me. The big thing to remember from this, these final accounts are very similar to what we've already done, so you haven't got that much new that you need to learn. Just a few titles, surplus and deficit, accumulated fund, and it's income and expenditure account, not income statement.